Hey everyone, I'm Kyla. Welcome to my channel where I talk about the stock market and the economy amongst other things. Welcome back everybody to things. Today I'm going to be talking about Web3. What is Web3? Why does Web3 exist? And sort of the drama that happened last week around Web3. I think it's important to talk about it because everything that we do ultimately boils down to narratives. And what we saw last week was a really great example of narratives happening in real time. For a very brief recap, Web3 is this concept that is somewhat married into crypto, where it's like the future of how we interact with the online interface. So Web 1 was read, Web 2 is going to be read write, and that's going to be Facebook, social media, etc., what we're most familiar with. And then Web 3 is theoretically this read write own, where instead of Twitter or Instagram owning all your data, you own your data and you're able to benefit. It's a lot of digital property rights, and that is meant to be the future of how we interact online. There was a very big debate last week from Jack Dorsey, who is the CEO of Twitter, obviously a Web 2 founder, versus it felt like half of the internet. There was a lot of people who disagreed with him, a lot of people who did agree with him. Jack is a Bitcoin maximalist, meaning that he thinks that Bitcoin is going to be the answer to everything and everyone should use Bitcoin. But he is also apparently anti-VC, venture capital, meaning that he doesn't think there should be centralized money flowing into these Web3 systems. So he tweeted out, "You don't own Web3, the VCs and their LPs do. It will never escape their incentives. It's ultimately a centralized entity with a different label. Know what you're getting into." And then he had a lot of pushback from people, and he answered, "It's a fight against rich dudes. He's not anti-ETH. He's anti-centralized VC-owned single point of failure and corporate-controlled lies." That's where he's coming from. And then Mark Andreessen, who is one of the founders of Andreessen Horowitz, A16Z, the biggest VC player in a lot of these spaces, blocked him. So Mark Andreessen blocked him. The whole thing really became this conversation around who owns what and why. And I think that's sort of what it all boils down to, is the builders are building, but who is building and how they're building and who is funding what they're building. That seems to be the biggest point of contention. And so across the board, you just saw a lot of pushback. Chris Dixon, who works at A16Z and tweets all sorts of things about Web3, said, he thinks Bitcoin is great, but there's other important applications. Jack was like, no, it's really the systems that we're trying to get into. It's really conversation around how things are being built, not who is doing what. So it kind of is boiling down to this idea of narrative, and there's a lot of pushback across the board. And I spoke about this in one of my most recent videos, like this idea of the crypto trade-off. In order to have a narrative, you have three main things, right? You have narrative creation, you have narrative resistance, and you have narrative disruption. Narrative creation is what everything goes through all the time. You're constantly telling a story, you're constantly trying to describe yourself to others, and you're constantly trying to describe the world to yourself. And crypto is constantly doing that all the time, and the problem with crypto is that it tends to be interpreted in the extremes of the distribution. People are like, oh, this is either a money laundering machine, or oh, this is a utopia. And there isn't a whole lot of people who are kind of in the middle of the distribution who are like, okay, I understand there's caveats and subtleties and contradictions to this. But then you get narrative resistance, where you do have people who say like, no, I don't think that crypto is the future. And then you have people who are going to secede from the United States and only have crypto states. And then you have narrative disruption. And so that's going to be players like Elon Musk, Jack Dorsey, who are battling against whatever main narrative is trying to be passed across. So Jack Dorsey is a disruptor because he got Twitter up into arms. So that's kind of what happened over the past few weeks, is like there's this big conversation around what Web3 is and what it means. I think to sort of caveat all of this, and I think it's just important to say, humans are humans, and humans are going to play certain games with each other. There's Darwinian winnings of survival. Survival is really a function of tribal games. And so really what we're all doing at the end of the day is just trying to calibrate to the market. With crypto, that's happening especially noticeably because there's rug pulling, there's grifting, but there's also like amazing things happening, helping people become financially free, helping people to benefit from the ownership stakes that they have in certain companies. So there's a lot of benefits to this narrative creation process, but I will say that there is a lot of gameplay, a lot of Ponzi games in the schema as well. I made this sort of visual because I think it's important to walk through all these different things that go on in the crypto space and sort of like how a company is formed and what it looks like. So take all of this with a grain of salt because it doesn't quite work this way, but this is just a very basic overview. Really, a company is a narrative, right? So a company is a story that we tell, and a company has three main things: customers, salespeople, and builders. And customers break out into four different things: neutral customers, interested customers, enthusiastic customers, and religious customers. Depending on what type of customer you are, you're going to like the system a lot more versus other customers. Customers who treat your product like it's a religion, they're going to be a lot more favorable and favored towards whatever you're building. The ones who are like out, in the streets fighting for the next iPhone kind of deal. Whereas neutral customers might not be that interested. And within a company, you have salespeople and builders. The salespeople are going to be the ones selling your narrative. Builders are going to be the ones building the narrative, building the product, and everything boils down to that narrative, right? So a company is a narrative. In the age of online, your customers do end up becoming your salespeople because everybody's online, everybody's searching out different reviews. Your customers, so this neutral to religious customer, they end up becoming your salespeople too. But they all interpret your narrative differently. Like you can have really three main narratives as a company. You can change the world, you can have an application, or you can chill, right? You can do really good, you can do okay, or you can do bad. Once again, take it with a grain of salt. The issue with that is oftentimes companies will have one narrative and then money will come in and tell them to change that narrative. That's where VC dollars come in. So VC dollars are the ones supporting the company. VC can be good, where it's like, yeah, this is awesome, or it can be bad, where it's like, we're going to shill your product to as many people as possible, assign a crazy valuation, and leave people holding our bags. To the extent that Jack was calling venture capitalists sort of parasites, they do seek out companies that have massive exit returns. It's companies in software who do have very high valuations because that's what the market values them at. VCs have a certain agenda when they fund companies. When you apply this sort of narrative company building to Web3, nobody really knows what Web3 is, but there's this concept of collective effervescence, which my friend taught me about. And this is the idea that people come together to participate in the same things, right? So that's the concept of hodling. And this really applies to crypto. It's collective effervescence. And then all these different narratives kind of pile underneath that, how people interpret this collective effervescence, how they interpret the hodling narrative that is in crypto. Some people see crypto as just get rich. Some people see it as ownership, participation, and governance. Some people see it as a layer of infrastructure, an additional part of Web 2. And some people see it as a diffused network where there are different entities, so Web 3 kind of existing alongside Web 2. But really the main narrative that Web 3 is probably going to achieve or wants to achieve is this idea of protecting and owning and benefit. So protecting your data, owning your data, and benefiting from your data. Nick tweeted about this, but it's where you run your own servers. It's where you have digital property rights, where your internet native. You don't have to register with a third party. It's anti-censorship, it's anti-exploitation, and it's really compounded by this element of FOMO. So the protect, own, benefit compounded by FOMO. And Kobe kind of wrote about this too in his Substack that he published over the weekend. At the very end, usually when the meta is common knowledge among all participants, the meta is already shifting to something else. So it can be this ultimate narrative, right, of protect, own, benefit, but crypto itself is a thread of other narratives, as Kobe said and wrote about, where it's how do you benefit from all these different themes that are happening. There's that main overarching goal compounded by FOMO, but there's all these different metas, as Kobe would say, that exist within that. How do you build and own and protect your own data? How do you become sort of like a business? How do you become Twitter.com, but for yourself? Or maybe not Twitter, because they don't do so well as a stock, but like Apple for yourself, right? Like, how do you own everything that you do? How do you benefit from the things that you do? So there's really two main narratives within crypto. So one, this is going to change how we act as an economy. This is going to digitize everything. This is going to make us own everything. This is going to change how we work, how we play, how we do things. And then there's the second narrative on the other side of the distribution, which is like, this is just a promenade of wealth. This is just a bunch of rich people getting richer and leaving everybody else behind. And so we have those two extremes, right? And of course, nothing exists within the extremes, but those are sort of the two narratives that kind of crop up around crypto. Is like, this is utopia or this is a hellscape. It's really a joke. And that's kind of the thing that you have to be careful about with crypto, is like a lot of the stuff that goes on is kind of a joke. People buying Olive Gardens, it's for fun. Part of the reason that crypto succeeds is because it's fun, right? Because it's interesting, because there's things going on, because you can buy a non-fungible Olive Garden. And then once you get people buying non-fungible Olive Gardens, then they're going to go and do other things with their money, right? And so crypto is getting people into the building through a bouncy ball playpen where you got kids pelting each other with those plastic balls, pew, pew, and then getting them through the lobby. Once they go up the elevator, that's where the impact happens. But the world only sees the bouncy ball playpen, and so it looks like, what the heck? It's like, okay, oh, this is not serious. That's the problem, is the narrative doesn't make sense to the world, and crypto knows that. And that's what the whole conversation on Twitter about. When Jack sort of raised this, everybody was like, well, what the heck even is Web3? Nobody really knows what's going on, but the narrative is constantly being made, so it doesn't really matter. Nobody knows. But you're building, right? Pass at the wall, like something will stick, we'll figure something out, and that is sort of the incentive-based mechanism that crypto has in place, where it's the McClelland theory of motivation, where you have need for achievement, need for power, and need for affiliation. If you think about crypto, it's met that need for achievement, it's met that need for power, need for affiliation. Oh, you're crypto, you're in here with us now. And then, but going back to achievement, you're building the future. Crypto is beautifully built in the regard that it incentivizes people, right? Not only monetarily, but through association. Crypto, to a certain extent, has become an element of religion for people. Nothing, wrong about that. But I do think that people are finding their association and their beliefs in this. And the issue is with religion is it's ultimately polarizing. You have some people who don't believe in the things that you believe in. And how do you deal with that, right? And you go to war, usually. Medieval times. But now you just go to war online. And so that's the problem, is that there is so much happening in the tails of the distribution with crypto and the interpretation and the incentives, where it can become polarizing to the rest of the world. I think to the point of VCs, venture capital money flowing in is interesting because it makes it so, instead of everybody benefiting from the upside, maybe that isn't right, but maybe it is right, because how do you have a narrative if you don't have money? You just can't do stuff without money. I realize I'm kind of talking in circles, and that's sort of by intention, just to show you how convoluted this can get and how complex, what does it and I talked about this in my trade-offs video, but what does it truly mean to be decentralized? What does it truly mean to own things? What does it truly mean? And of course, everything will be probably a little bit more muted than we originally think, because there's always going to be an element of things getting in the way of the narrative. But that's kind of the thing with crypto, is that we see the VCs doing their things, and they do have pretty big Web3 ownership, especially in Solana. So it's how does that go over with people? And Web3 is this constantly redefined narrative. Is it something that you own? Is it something that you host? Do you protect it? Do you defend it? Who is going to surveil you? Does anybody surveil you? But who do you turn to when you need something? And I talked about this in my trade-offs piece, but it's great to own stuff, but who do you call when things go wrong? You don't have anybody. So there's always that trade-off and that confusion around this. And we've been here before, right? So Web 2 was a really similar argument. People just want to use it. People now just want to make money off of it, and buzzwords are buzzwords. Web3, at the end of the day, the general idea of it is to protect your own benefit, and that's probably going to happen regardless of if it's called Web3 or not. This is just narrative, right? And so that's the big thing to kind of get across here. And in the markets at all times is there's a narrative. Tesla has a narrative. Apple has a narrative to a certain extent. Rivian has a narrative. Narrative is really how you tell your story, obviously. And that's what is happening here, is there's just a disagreement on how to tell a story. And so the reason I wanted to talk about this today, crypto can be confusing. There's a lot that gets lost, and what coin is going to 100x? 400x. Should I buy an Olive Garden? But it's good to remember the potential of this stuff, right? What could this achieve? What kind of world could we have? So yeah. I will be back. I'm going to do a few more videos throughout the week. Sorry for last week. There was a lot going on. I hope that you had a good holiday if you celebrated. If you want to go ahead and hit subscribe, that'd be awesome. And I will see you soon.